Yeah, good morning to each and every single individual. Hopefully, all of us are doing exceptionally good, guys. The purpose of this video is just we'll be doing a continuation of VET. In our previous session, for VET, we only dealt with the theoretical part of it. Currently, I just want us to deal with our ledger accounts, which is your VAT input ledger account and also your VAT output ledger accounts. So on our last session, we said that we said that our VAT input, this is the VAT in which we paid, right? Meaning it's an expense. We paid it when we acquired our products from our suppliers. And then we said that we associate our purchases with VAT input. So it's your expense ledger accounts. So meaning that let us look at our check on them. So each and every single time when acquiring your products, each and every single time when acquiring your product, you'll have to debit your VAT input ledger account. Let's just see that when you acquired products from where? From your supplier, you pay a VAT amount of 100,000, or maybe just say 100 rand. It simply means that 100 rand you'll write it here. And 100 rand will be your VAT. And then also here you're going to write 100 rand. And then here also write 100 rand. Then the balancing figure you call it VAT control. Meaning here you're also going to write 100 rand. By writing 100 rand, you're just indicating that when you're dealing with or when you're doing your VAT control ledger accounts there, on the debit side of a VAT control ledger account, you're supposed to have a VAT input amount of 100 rand. So that's basically our VAT input. And then the second ledger account that we have VAT output. We said that we associate our VAT output with what? With customers or sales. Customers or sales there. We said that we associate our VAT output with our sales. Meaning if ever we are selling products to our customers, this is the VAT that we are going to receive. So somehow, we said the VAT input is an expense, meaning this one will be an income. So each and every single time when we charge our customers a VAT, we are going to credit it on our VAT output amount. Meaning if ever you received a VAT amount amounting to 100,000 rand on your sales, we'll credit it and then also write it here. And remember, your ledger account is supposed to balance. And then here it will be a balancing figure. You'll write it as a VAT control. Why write it as VAT control? You're just indicating that when you're dealing with when you do your VAT control ledger accounts, on the credit side of it, you're supposed to have your VAT output as the same amount, which is 100. And then you have the last ledger accounts in which we call VAT control. So VAT control, basically, one of the reasons in which we do it, we calculate what? VAT payable or receivable. VAT payable or receivable to SARS. So meaning you're just checking on whether we owe SARS or SARS owes us. That's the purpose of us dealing with that output. So another thing that I forgot to include here is that you can have an opening balance of a VAT control. You can have an opening balance. Opening balance can either be on the debit side or the credit side. There are instances whereby you have opening balances. Either your opening balance, it will either you are owing SARS or SARS owes you. Hence, I'm saying that your balance both down can either go on the debit side or credit side. Let me just write it here. Balance brought down. Since in our notes, I omitted to record it. And here can also have balance brought down. So it will depend on your side. And then you remember that when we was dealing with our VAT input, we said that On the credit side of a VAT input, if I will remember very well, you had VAT control, right? So that balance in which you had it there, you're going to write it as it is. So in a situation, we had said that it is 100 rand. And also in your VAT output, you're going to record this balance that you got here. You'll write it where? Pardon me, guys. You'll write it here. And then this one, we said that is that balance on the credit side of our VAT input. And then we just check which side is the bigger side. We'll check which side is the bigger side. If your credit side is the bigger side, it simply means that you'll have a VAT payable, meaning you're owing SARS. But then if your debit side is the bigger side, it simply means that it's VAT receivable, meaning our SARS owes us. So let us look at it at more perspective. That was just an overview of our ledger accounts. Let us look at it on a most perspective. So when we were dealing with our accounting equation, remember that we said that a transaction always affects two accounts, except when you are selling. Our transaction always affects two accounts except when you are selling. Let's make an example with this transaction that we have there. We have what? Purchases of trading stock by cash. So two accounts that will be affected will be what? Your trading stock and also your bank. Right? Two accounts will be affected. So our trading stock will increase and then our bank will decrease. Remember, your trading stock is an asset. So meaning your asset will increase by the value of 500. And then your bank will decrease by the value of 500. Hence, we debited bank and also credited bank. But then what if we bought our products on credit? If ever you had bought our products on credit, it was going to affect two ledger accounts. Debit trading stock, and also in this situation, you'll credit creditors control since you bought the products on credit. Meaning also when you were dealing or when you're supposed to do your ledger accounts for trading stock, you're going to debit the 1,000 rand, and then also when you're dealing with the creditors control, you're going to credit 1,000 rand. But then what if our business is registered for VAT? Obviously, if our business is registered for VAT, there will be VAT implications in which are supposed to be followed, right? There will be VAT implications in which are supposed to be followed. So when you're registered for VAT, it will no longer affect two ledger accounts, but then rather three ledger accounts. Let's make an example. With regards to that transaction that you are dealing with, let's just say that we bought our trading stock by how much? By 1,000 rand. But then that 1,000 rand is VAT inclusive, meaning it has VAT by cash. Right? First thing that you're going to do, the three accounts in which are going to be trading stock will have to, it will be affected, and also bank. And these are the common ones. And then also, since you're registered for VAT, you will have to debit your VAT input since you paid your VAT. In your bank, you'll credit the money that you have paid. Whether you pay a VAT exclusive VAT input doesn't matter, but then with regards to your bank, you always credit the amount that you paid. So in this situation, you paid 1,000 rand. And then remember that your trading stock should always be VAT exclusive. The value of your trading stock should always be VAT exclusive. So we have how much? The stock that we paid or that we bought is 1,000 rand. But then that 1,000 rand is VAT inclusive. So we know that the value of a trading stock should be very exclusive. We are going to use the formula or traditional formula amount multiplied by what I want for what I have. Therefore, 1,000 rand multiplied by very exclusive, meaning multiplied by 100 divided by 115. And then we get your value of trading stock in which amounts to 870. So you got your very exclusive amount. And then with regards to the trading stock, we will just say multiply by 15 divided by 115. And also we'll get your VAT input amount as 1/3, in which you'll debit it. There. And then that will be the effect. So remember, when you're registered for VAT, three accounts are supposed to be affected. Let's do another example. Let's just say that we had bought our trading stock in this situation by 1,150, but then in this instance, on credit. Just like your bank, creditors control, you will credit the amount in which you owe your supply. How much do we owe our supplier? 1,150. Therefore, credit it. And then remember the value of a trading stock should be very exclusive, right? We debit it. And then since this transaction we purchased, bought to port is to purchase, it simply means that we paid our VAT input. And then you'll debit your VAT input. So what will be the effect? You'll have to calculate your what? Your VAT trading stock value, which is supposed to be very exclusive. Therefore, we'll say amount multiplied by what I want or what I have. Meaning multiply by 100 divided by how much? Divided by 115. And then we'll get to a very exclusive amount, which amounts to 1,000 rand. In which you wrote it here. Meaning when you do your trading stock ledger accounts, you are supposed to debit 1,000 rand. And then also when you calculate your VAT, 1,150 multiply by what I want over what I have, meaning multiply by 50 divided by 115, in which we'll get 150, and then we'll debit it. But then what if you go to our ledger accounts? When you write it in your ledger accounts, since we said that these are the three transactions that will be affected, we'll use the very same, our first example. In our first example, we say that we debited trading stock, right? We debited trading stock. We say that three accounts that will be affected is trading stock, VAT input, and also a bank. We use our first example whereby we bought a trading stock by cash of 1,000. So in a trading stock, this is what you're going to do. You'll debit your bank. You'll debit your bank by what? 870. You're just indicating the methods in which you bought your stock. You bought it on cash, and just supposed to write bank there. And then you'll also debit your what? You'll also debit your VAT input by what? By 130. To indicate that you also paid your VAT. Hence, you're supposed to write bank there. If you ever had plus on credit, you're going to write creditors control there for both trading stock and also VAT input. And then lastly, your bank, you credit 1,000 rand just to indicate why did you buy or why did you pay for. So we paid our VAT. But then what if we are selling our stock? If ever you sold your stock, we said that remember that when dealing with the accounting question, we said that in a transaction, two accounts are always affected, except when we sold our stock. When we sold our stock, we said that four accounts will be affected. Which four accounts will be affected? In which we know that the other three are always the same, and then the other one is not constant. So let's make an example, okay? Let's just say that in this situation, they are telling us that you have a transaction, sold stock to the value of 1,500, and then they provided us with their cost price. We said that when we sold our stock, these are the four accounts that are always affected. When you sold our stock, the account that are always affected, the first one, the second one is sales. Sales, cost of sales is our third one, cost of sales, and then also trading stock. And then this one is bank. If ever we bought our trading stock, pardon me there, if ever we sold our trading stock on cash, we are going to debit bank. But then if ever you sold it on credit, you will write debtors control. And then you say that this one we always debit it. This one we credit it. Our cost we debit it. Trading stock we also credit it. These ones are always affected. Each and every single transaction of yours, when you are dealing with the accounting question, those four accounts will always be affected. Then with regards to our first one, when you sold with cash, we write bank, but then with credit, you write debtors control. Okay, let us deal with our transaction. In this situation, they said that we sold our trading stock to the value of 1,500. Right? Right? To the value of 1,500. So it simply means that you will debit in this situation, on cash, right? You will debit your bank. Your bank will debit by how much? 1,500. And then credit your sales with 1,500. Our sales is going to increase. And then we'll debit our what? Our cost of sales by how much? By 1,000 rand. Then remember, trading stock, it will also decrease. It will decrease by what? By the value of your what? By the value of your cost price. And then those are the accounts that will be affected. But then if ever they say that it was on, maybe they say that we sold it on credit, we're going to write that as control here. You're going to write that as control. Simple. So the only thing that what I was going to change was with regards to our bank. But then what if our business is registered for VAT? Obviously, if ever we are registered for VAT, we know that it simply means that we're going to charge VAT. There's a VAT output implication. So subsequently, when your business is registered for VAT, 5 accounts will be affected. In which the first 4 ones are always correct. The first 4 ones, let me show you. You will still debit your what? You will still debit your bank or that has control. You will still credit your what? Credit your sales. But then remember, we said that when we sold our products, which accounts are supposed to be affected? VAT output. And then we know that our VAT output, we are supposed to credit it. And then here we are going to credit your VAT output. And then with regards to debiting your cost of sales, nothing will change. And with regards to crediting your trading stock, it won't change also. So let's make an example. In the same example, let's just say that what if our business is registered for VAT? Like, let's just say that our business is actually registered for VAT. And then they told us that you sold a trading stock with a value of 1,500. But then that 1,500 is VAT inclusive. And then you sold it on what? On cash. Obviously, when you sold the product on cash, you'll write bank. Bank will always debit the amount that you received. How much did you receive? 1,500. So you'll debit 1,500 in your bank. With regards to your sales is supposed to be very exclusive. We need to have to calculate very exclusive amount, in which we'll say 1,500 multiplied by, use of formula, very exclusive, is 100%. Multiplied by 100 divided by 115. And then we'll get a very exclusive, which amounts to 1,304. And then we'll calculate your VAT input, your VAT amount. For you to calculate the VAT amount, 1,500 multiplied by what I want for what I have, meaning multiplied by 15 divided by 115, in which you get 196. And then your cost of sales is still 1,000 rand. And then also the trading stock, 1,000 rand also. So the only thing that changed is this one. It's our VAT output and also your sales. So let us look at our ledger accounts in which we use. So the first thing that we know for sure is that we will debit our bank. We debit our bank with what? With the amount that we received. We received how much? 1,500. So we'll debit bank and write sales and VAT to indicate which that amount was relating to sales. And then on your sales, you debit your bank to indicate the method in which you sold. You sold on cash. You're supposed to write bank. Then on your VAT output account, you also write your bank to indicate that you paid your VAT amount by cash. And then with regards to the other ones, debit your trading stock and also credit your what? Credit your trading stock also. And then that's how those accounts are supposed to be done. So for today, I just want you guys to look or go through this video to see the VAT implications and also the ledger accounts in which are affected. But then on our next session, we'll definitely do calculations. It will be a practical class in which you do the calculations. So hopefully this video will serve as an asset to you guys. Thank you.